It's time. ARK Invest Big Ideas 2025 has dropped and we are heading straight to the Robotaxis. And what do you know? First page of the Robotaxis, 69. Electric vehicles continue to take share from internal combustion engine vehicles. Yes they do. And not only is this true, but we are soon in the next couple of years going to see a massive acceleration in the collapse of internal combustion engine vehicle sales as electric vehicles become much more affordable and create a death spiral for ICE vehicles due to their increasing costs. The gap in value proposition between internal combustion engine vehicle and electric vehicle is going to widen, and not just in a linear rate, but an accelerating rate. Today, ICE vehicle manufacturers have paper-thin profit margins, very high fixed costs. They need to keep selling comparable volumes of ICE vehicles every year, otherwise the cost per vehicle will increase, meaning their margins shrink and or become completely negative. And as that happens, they either have to raise their prices or make less and then zero money selling ICE vehicles. And exactly the same time that's happening, electric vehicle costs are going to continue to come down. Remember, Tesla's range of new, more affordable vehicles entered production first half of this year. Apparently, ARK Invest and I are in agreement here. As they write, the trend is clear. The internal combustion engine is on its way out. And again, I have to underscore, this is a house of cards for the internal combustion engine vehicle industry. Paper-thin profit margins, they need to continue selling comparable volumes of vehicles, otherwise their profits collapse, which are already paper-thin. And once the profits turn negative on ICE vehicles, why would you keep selling a product you're losing money on and only going to lose even more on? Next minute, bunch of bankruptcies. Don't say I didn't warn you. This, a rather telling headline. After more than a decade, most automakers have dropped out of the autonomy race. Tesla and Waymo remain. It continues. In 2014, many automakers expected to debut an autonomous vehicle by 2020. Only Waymo delivered, launching its first commercial autonomous rides in 2018. Tesla plans to launch in 2025. Waymo's launch and Tesla's internal testing of robotaxis suggests that 2025 could be the standout year in which consumers and businesses agree that the future of transportation is autonomous. Now, given the fact that autonomy is a decatrillion-dollar opportunity, and if you don't offer autonomy in the future, you won't be in business, two pretty strong incentives there. It's quite interesting to see that there's only really two companies still in the race. This seems to suggest that it's a relatively challenging and extremely expensive problem to solve. Many folks out there are under the impression that there's a magic solve autonomy button, but if that were the case, then why would most companies who know their very existence depends on having autonomy have abandoned the pursuit? The next page has a title, also known as Obvious Things Are Obvious. Autonomous ride-hail should increase access to convenient point-to-point transportation. This data may surprise some people, but adjusted for inflation, the cost of owning and operating a personal car has not changed since the Model T, the Ford Model T, rolled off the first assembly line more than 100 years ago. Now, the reason for this is actually quite obvious. What do you get today, 2024, in a vehicle compared to a Model T? It's night and day. Vehicles have become a lot better, a lot safer, a lot more comfortable, technologically advanced, as opposed to much more affordable. In other words, for the last 100 plus years, it's made a hell of a lot of sense to own a vehicle, personally own a vehicle. But that's about to change. ARK estimates that autonomous taxis at scale could cost consumers as little as 25 cents per mile, spurring widespread adoption. And again, obvious things are obvious. This is likely to save a typical household thousands of dollars per year if they use transport as a service via robotaxis versus personally owned a vehicle. Now, not everyone is going to make the switch, but I think it's fair to say most households on Earth, given the opportunity to save thousands of dollars per year, will be all over it. On screen now, we're looking at cost per mile. Human-driven ride-hail in the US, e.g. Uber, Lyft, taxi, whatever, about $2 a mile. Personal car, almost half that amount, $1.10 per mile. Again, this is in the US. In China, in 2024, human-driven ride-hail, 35 cents per mile. By the way, does that not tell you a lot of what you need to know about the huge portion of human-driven ride-hail that's comprised of the human part paying the driver? And ARK's estimate for the cost per mile globally in robotaxis in 2035, 25 cents. ARK pointing out that robotaxis are already at an annualized rate of 12 million rides per year. Waymo's annualized rate in millions of rides per year, around 9 million. Baidu, over in China, a distant second place, around 3 million. Pony AI, barely registering. Tesla, zip, none yet. But where things get interesting, on the right here, autonomous miles run rate. Miles equals data. Tesla currently collecting roughly 100 times as much data as any other company is capable with their autonomous rides. ARK point out, with the largest data lake of all players globally, and again, we can see it's not even close. Its proprietary data advantage should give Tesla a competitive edge if it launches ride-hail operations as planned in 2025. Theoretically, Tesla alone could hit ARK's Robotaxi industry forecast in 2030. By 2030, ARK's research suggests that the number of robotaxis will have scaled to roughly 50 million globally. Wait for it. With Tesla at around a 50% market share, competitors could face barriers to scale, given the intense price competition in China and the lack of alignment between technology providers and traditional automakers. Separately, if it were to allocate 100% of its future vehicle production to robotaxi service instead of the 30 to 40% assumed, Tesla alone could hit ARK's robotaxi industry forecast in 2030. Translation: if Tesla stops selling vehicles to consumers, which by the way is entirely possible, Tesla could have 50 million robotaxis on roads by 2030. Just to be clear, this is not a prediction from ARK, they're just saying, per the title, theoretically, Tesla could do this. And remember, autonomy is a $10+ trillion opportunity. Just imagine hypothetically if Tesla were to actually reach, say, 50% market share. But wait, there's more. They would most likely have a stronger footing in Western markets, meaning slightly higher cost per mile charged to consumers versus a company with a bigger hold in China, aka lion's share of the profits. Now, I remind you guys about Tesla's mission to accelerate the world's transition to sustainable energy. What's in line with Tesla's mission? Maximizing the number of electric miles driven per year, which directly replace miles driven in internal combustion engine vehicles. And how do you do that as a company that produces vehicles? Produce autonomous vehicles. That's where their biggest return on investment is. It's quite obvious if you read Tesla's mission statement and their master plan. They will do whatever they can to increase the number of miles driven. And to do that, what it really means is increase the number of robotaxis on roads and increase their utilization rates. That's all you need to know. If you're ever a little uncertain about Tesla's next move, you just got to think, what's going to increase the number of miles driven in Tesla robotaxis? The answer is 1, make more robotaxis, and 2, make cost per mile as low as possible. The end. Simple as that. Telling you now, that's their plan. It's not hard to figure this out. Autonomous electric vehicles could rapidly shift vehicle miles traveled to electric. What do you know? That's exactly Tesla's mission. Imagine that. Autonomous electric vehicles could exceed 50% utilization, pushing a disproportionate number of miles traveled from gas-powered vehicles to electric drivetrains. And again, this is exactly in line with Tesla's mission statement. That's exactly what's going to happen. Tesla will not be trying to milk maximum profits from their robotaxi service. Obviously, they have to make money, otherwise they're not in business. But bro, they're going to make as many cybercabs and robovans as possible, as fast as possible, as affordably as possible, and aggressively drive the cost per mile down. We here have some estimates plus historical data for electric vehicle miles traveled without autonomy and with, and then forecasts for electric vehicle miles traveled without autonomy in purple and with autonomy. You might notice something. Autonomy catalyzing a surge in total electric vehicle miles traveled. This is exactly what Tesla wants. Again, it's in line with their mission. Wright's law suggests that a $15,000 robotaxi is possible. Tesla has suggested that the Cybercab will have an efficiency of 5.5 miles per kilowatt hour. Paired with the battery cost decline anticipated by Wright's law, that efficiency suggests that the battery could cost as little as $2,300. We can see that here in the table. Typically, the drivetrain of a vehicle is around 20% of the total vehicle cost, which suggests a Cybercab could be profitable at a price of $15,000 or below. On the left here, we've got battery cost declines. Purple is actual cost declines on nickel cells. Blue, forecast. I mean, goddamn, this is so fucking predictable. It's incredible. These are almost perfectly straight lines. You guys understand, right? And by the way, this is obviously a log chart going up by factors of 10. In grey here, we have LFP cells and then the forecast. When we talk about predictable cost declines on batteries, this is what we're talking about. This shit is incredibly obvious, clear, and predictable. And these predictions, these cost declines, these predictable cost declines put us here. Now, is this realistic? Would it be possible for a company like Tesla, completely vertically integrated manufacturing expertise, to actually produce an efficient, capable 250-mile range robotaxi for $15,000 or below? Spoiler alert, yes. Is it possible for a company like Waymo that doesn't make their own vehicles and doesn't have the expertise to do the same? Probably not. Long story short, Tesla has a permanent cost advantage in terms of hardware. Good luck competing with that on cost. And remember, Tesla ain't going to try and make as much money as possible. They're going to increase the number of miles driven autonomously by lowering costs. Just like we're seeing in the electric vehicle industry. Tesla's not running millions of Super Bowl ads trying to make the most profit possible. They're trying to sell as many vehicles as possible and drive the cost down aggressively. One of the only companies making any money selling EVs globally today. Instead of resting on their laurels, keeping their prices the same, just trying to crank out as much profit as possible, they continue to cut costs and pass those savings on to consumers. In other words, Waymo has an insurmountable cost disadvantage. And because of Tesla's mission statement, they will aggressively drive their cost per mile down to use a robotaxi service. We're going to see the same shit happen with autonomy that we saw with electric vehicles. Tesla making all the money and then driving their costs down while everyone else loses more and more money trying to chase them down. Does not end well. And for the record, I've just cross-referenced this with my own estimates for Tesla vehicles in my valuation model. My Patreon supporters can go have a look now. If you check out the base case assumptions over the long term, the little table there toward the bottom, the long-term vehicle lineup, average selling price, base prices, etc., I've personally estimated that by the end of this decade, give or take, Tesla could be producing a compelling electric vehicle for sub $15,000. I've got an estimated base price of $16,200, but that includes a bit of a profit margin. So ARK's estimates are in line with my own. This doesn't mean I'm smart, nor that ARK is smart, but we're at least not so dumb that we can't look at predictable cost declines, project a little bit forward into the future, look at cumulative production, and come up with comparable estimates. Next page. Tesla's cost per mile is 30 to 40% lower than Waymo's. Its higher cost structure is likely to make Waymo less competitive or less profitable than a Cybercab robotaxi service. Number one, obvious things are obvious. And number two, keep this 30 to 40% cost advantage in mind for later in this video. It's very important. Waymo's dependence on LiDAR and higher cost auto manufacturers are two drags on its competitive positioning. This is extremely true. Got a cost comparison here. Incremental cost per mile on robotaxis, the Waymo's 5th generation robotaxis compared to, let's just say, an early launch Model 3. Waymo's 6th gen, much more affordable, but Cybercab still just a fraction of that. Shown differently, we're looking at how many vehicles Waymo can put on roads versus Tesla for every $5 billion they spend. For $5 billion, Waymo can't even put 100,000 vehicles on roads. Tesla approaching 350,000. So who wins? If you don't know anything else, who wins? Tesla. And again, the most important thing to understand here is Tesla's mission statement. I cannot emphasize this enough. Tesla's going to make as many Cybercabs as possible and drive their cost per mile down, what they charge consumers per mile, as aggressively as possible. They can do this because they're going to have a huge cost advantage. Waymo will have to follow Tesla down in terms of cost per mile, or no one's going to use them. If you have a comparable service, you don't give a flying fuck if it's a Waymo or a Tesla. What do you give a fuck about for comparable/identical service is how much does it cost? It's like your internet provider or your cell service. You don't give a shit what brand it is. Like, how much does it cost? It's the same shit. I just want the best value. The problem here is if there's enough of a gap in terms of costs, if Tesla has enough of an advantage in terms of the price that they have to spend to put a Cybercab on roads and the operational costs, you can reach a point where Tesla can charge a cost per mile and still make a healthy profit that if Waymo matches, they can't make any money doing so. That's a very bad situation. And this is exactly what we're seeing play out in the electric vehicle industry today. There's just a couple of companies in China making a tiny amount of money per electric vehicle sold. Almost all of the others are losing money. And China's the most advanced and developed EV market on earth. No company outside of China, besides Tesla, is making any money selling electric vehicles today. Tesla's dictating terms around pricing. Other companies are trying to keep selling through their electric vehicle production by matching Tesla's prices, but in doing so, losing tens of thousands of dollars per electric vehicle sold. The exact same shit's going to play out with autonomy. The cost advantage matters. For the nerds, we're looking at a breakdown of cost. Today's human ride-hail cost per mile versus robotaxi forecast cost per mile. Feel free to pause and look at this in detail. Don't want to put too many people to sleep. Soon, Tesla expects more than 10,000 miles between critical interventions, or roughly 1 year's worth of human driving before the average person would need to touch the wheel in FSD mode. Later in 2025, Tesla plans to outperform the national accident rate, or roughly 700,000 miles between critical interventions, paving the way for conversations with regulators. ARK also say that in their view, Tesla could launch a robotaxi service with remote operators before hitting that milestone. Waymo's commercial robotaxi fleet has now surpassed 400,000 miles per police-reported collisions, which is not quite the same, but, as they note, impressive performance for a fleet of its size. And now, the two most important slides. Ride-hail could create a roughly $10 trillion market. At 25 cents per mile, autonomous transportation could serve a much larger population than human-driven ride-hail does today. This is true. One of the biggest mistakes many so-called analysts are making when attempting to size up the autonomy market is looking at the size of today's ride-hail market and assuming that autonomy will be a fraction of that. But if it costs significantly less to use a robotaxi, and it will, than to use an actual taxi or an Uber, more people can afford to use a Robotaxi than can afford to use an Uber. This is not rocket science, bro. And again, back to Tesla's mission, the lower they can get the cost per mile, the more people will be able to use these things, displacing more internal combustion engine vehicle miles driven per year. Here's a fun exercise. Think about the last domestic flight you took. How many miles did you travel? How many miles would that take to travel in a Cybercab? What if you were charged 25 cents per mile? Do the numbers. How much more affordable would taking a Robotaxi instead of that domestic flight be? Admittedly, it may take a little bit longer to get there, but instead of having to take a taxi to the airport, go through security, wait around, your flight's late, blah, fucking blah, blah, you get the point. Instead, you get the Cybercab, it pulls up and you're on your way. And it won't take as much longer as you might expect. You don't just count time in the air to figure out how long it takes to fly somewhere. You've also got to factor in getting in and out of the airport, getting to and from the airport, blah, blah, blah. And what could you do with that time in your own private Robotaxi? Who, or what I should have said, versus being crammed into a domestic flight with a bunch of other people. Autonomy is not only going to disrupt personally owned vehicle miles travelled, but a portion of domestic air travel. And what we're looking at today, ride-hail addressable market. Currently, $134 billion addressable market for companies charging $2 to $4 per mile in Western markets, so excluding China, developing nations, etc. It's so fucking small you can barely see it, but there's a purple sliver here right on the left. Along the bottom here, we have total miles, addressable miles, right? But this is based on cost. So from $4 per mile in purple, in grey then to $3, and $2 per mile here in the green, you can barely see them, they're so fucking small. The total addressable market is approximately fuck all. That's Australian for not very much. I mean, you can barely see it. But where the magic happens, in grey, price point, $1.10 per mile, which if you guys remember was exactly the same as the cost of personal vehicle ownership. Suddenly, we're now looking at 1 trillion addressable miles. And at $1.10, that's roughly $1 trillion of actual market opportunity too, right? Easy math, $1-ish per mile, 1 trillion miles, suddenly, it's $1 trillion of revenue. But where shit starts to get absolutely outrageous is for every few cents, 10, 20 or so cents, you can shave off that $1.10 per mile, you get an enormous increase in the number of people that can afford and will use Robotaxis. So remember earlier, we saw that 30 to 40% cost advantage. That's where this really starts to matter. The number of total addressable miles that opens up for every few percent, you can shave off cost per mile, starting at that $1-ish per mile range and going down from there, grows exponentially. This is really important to understand. At 60 cents per mile, we're now looking at roughly another 4 trillion additional miles. At the lower cost, that's still an additional $2.4 trillion revenue opportunity. The long tail, once you get toward that 25 cent per mile mark, suddenly the number of people who can afford to use Robotaxis explodes. We could be looking at 30 trillion miles traveled per year. Now, which company is going to be able to unlock this massive long tail of opportunity? They got to get to around 25 cents per mile. How do you do that? By charging around 25 cents per mile. And how do you do that? By having a fucking sustainable business model with the lowest possible cost so you can actually charge 25 cents per mile, still make money, and not go out of business. Something like this is where Tesla will ultimately get to, and they're going to try and get there as fast as fucking possible. And finally, Robotaxis could generate around $34 trillion in enterprise value by 2030. In purple here, we have the autonomous electric auto manufacturers, e.g. who's actually making the vehicles. In grey, the fleet owners, and in green, the platform providers, e.g. the Tesla Robotaxi network versus whoever actually owns the vehicles versus who made the vehicles. Now, I'm not very good at math, but earlier we saw ARK suggest that it would be possible that maybe Tesla takes half this opportunity, just theoretically. What's half of 34 trillion in enterprise value? Someone say $17 trillion? Oh, is that all? Oh yeah, you should probably ignore autonomy. And if you happen to find a company that has a massive, massive cost advantage, sustainable cost advantage, you should probably ignore that because they're, even if they do take the lion's share of this opportunity, it's not like a $34 trillion opportunity is a big amount anyway. You should probably ignore it. Thanks. Want more content? Early access? A bunch of perks? Click the links in the pinned comment. AG1 is awesome. I've been taking it daily now for more than 3 years. It's a great way to fill in nutritional gaps. It's packed full of vitamins, minerals, and whole food source nutrients. Plus, has prebiotics, probiotics, and adaptogens to improve gut health, regularity, and help your body handle stress. I'm always looking for an edge to help me feel and perform my best, which is why I haven't missed a day of AG1 for more than 3 years. Just try it and see how you feel. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs. This is what viewers of the channel had to say after trying AG1. I feel like I have a lot more energy since I started on AG1. Just got my AG1 in the mail. Legit feeling the effects after day 3. 3 months ago, I started AG1 and have been enjoying the evenness of alertness and energy that lasts the day. I just started the wife on it too. Are you convinced yet? I mean, hey, it's worth trying, right? Click the link in the pinned comment or head to drinkag1.com/SMR, or I can keep going. This viewer, after about a month on AG1, definitely a lack of fatigue in the afternoon. Pleasant side effect is that my coffee intake has imploded and is almost down to 0. One more? Yeah, why not? I honestly feel younger and will be continuing to use AG1. This stuff really is crazy good. I didn't think it would be, but this stuff is awesome. It really is what everyone is saying. One more? Don't mind if I do. I've just received my 3rd month supply. I've drank it every day. I have so much energy throughout most of the day. I'm productive, started a new business, started socializing, refurbished a boat. It's no coincidence. Thank you for your persistence, your integrity, and your insights. Now look, these are not my words. These are not my testimonials. This is what you guys and girls are saying. Maybe it's 100% placebo effect. But even if that's the case, I think it's money well spent. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs.